Hey everybody, welcome back. Wild day on the CPI. We're going to dig into that. Let's just start there. This is Trading Economics, and why I like this site is one, it's free. So when I show people this site, they can go and do this themselves. Trading Economics, and it's just based upon their calendar, and they outline everything perfectly. They come out with the data almost immediately. So I really like this site, and again, it's free. I have no affiliation with them. But let's talk about what happened here. Point 2 versus point 3. Core is without food, without energy. Now, there's a couple takeaways here. This came in lower than expected. It was based upon healthcare, shelter, but really healthcare. So we could dive into those numbers on Saturday, but the important thing is lower than expected, lower than expected. So you can see that right here. This is where it gets really interesting. Inflation rate month over month. Inflation rate month over month. Now, this is not core. This is inflation. Why is this important? Give a 0. You were looking for 0.4. The one thing that people will do is they will look at this, and they should, but you really want to know what inflation is. What are things costing? Now, on Saturday's video and yesterday, I showed how we had to look at crude oil and gas and how they were down double digits and how that could affect this number and how this number could be weaker. Now, you never know how these numbers are going to play. And certainly if I knew it was going to be this week, you would have played it, but it is what it is. And here you are, 50 basis points. We have not been 50 basis points off a CPI in a long time where they're saying, oh, it's 3.7, we're going to come in at 3.2. So there's a couple things to take away from this data. Number one, they are way off on what they were expecting, okay, from before. Here you are with consensus. They are way off on what the forecast was, consensus, and what people are expecting. And that is really significant for us to look at. This was previous, this is where you're at, this is consensus, this is what's coming out. Not only that, but here's where it gets interesting. This is aggregate CPI, which never really drops. It's dropping. So to say that this was a home run for inflation would be an understatement. Now, that is the macro side of it. That is the information and the econ. Now let's look at what it did to the market and where we should go with this information. First, it's going to rally equities, and we should understand why this is going to rally equities. And I'll give you a really simple back of envelope way that you can think about this for yourself. And it's real simple. If they don't raise rates, bond prices will rise. If bond prices rise, yields will drop. So yields are dropping. When yields are dropping, bond prices are rising. All right, so we understand that. This is yields dropping. This is bond prices rising. If that happens, if the dollar drops, then equities will rise. Okay? So in other words, yield drops, bond prices go up because they're buying bonds. The dollar will drop, equity prices will go up. It's that simple. Now, here's where it gets super interesting. You have about, and we'll do this on Saturday, you have about $1 trillion sitting in money market accounts, right? $1 trillion just literally sitting there. This represents $1 trillion sitting in money market accounts. And they're all excited because they're getting their 5%. Okay, those days are over. So now they have an option, but they have to buy risk if they want 5%. Where are you going to buy 5%? Are you going to go to bonds? Well, you better lock in now. The more money that comes from here over to here and buys bonds, the more money that comes over, the more the dollar drops, the more equities go higher. It becomes a self-fulfilling thing. And that's really very important. Now, who benefits the most from this? Equities. They're up 2% on the ES. NASDAQ is absolutely exploding, up 2.29. Who benefits the most? IWM. We've been waiting for this move forever. Now, as I was very vocal yesterday, I had a trade here that I got stopped out of, and I have to honor my stop. I literally got stopped out by 2 cents. It happens. It's the nature of the game. On to the next trade. We did exceptionally well today. There are 2 things I really want you to watch today that I'm going to explain to you. Number 1 is how to pick rotation in the middle of the day. Number 2 is how to utilize pre-market data so that you can make more informed decisions about where to get into your day trades. We're going to cover both of those very, very quickly because we have a lot to go over. Now, you can see your movement here and you can see your breakout. There's very little to say. Should you be buying an index that's up 5.5%? You have PPI tomorrow. You have retail sales tomorrow. You got to see how that comes out. Let's be honest about retail sales. It's not going to matter. PPI is going to be lower. There's no way that corporations, PPI is what producers pay. CPI is what we pay. Corporations are not paying more, and out of the goodness of their heart, not making money. So let's deal with that and call it what it is. If we take a look at how this market's moving, there's very little value that I'm going to add here in saying this is resistance, right? I'm going to waste everybody's time. I don't want to waste everybody's time. We have a lot to go over where we could actually talk about actionable ideas. It's very silly for me to sit here and go, we're going to go to here. Everybody already knows that. I'm not adding a tremendous amount of value to you by doing that. Everyone sees these DTLs, how you're shattering them. Everyone sees the double bottom. Very little value that I'm going to add there. Even discussing the overbought, oversold right now, We all know that scenario. There's very little that I'm going to add to there. We know that we're overbought on the short term. It's statistically impossible to not be overbought when you have a major macro event. And this all fits right into the stool. This is one of the reasons why I always hammer out the stool where macro, let's get that arrow going. And thank you for commenting about the editing. I really appreciate that. It saves us a ton of time and I can get through way more here. Okay, so here we are, macro. Fundamental, technical. Everyone's going to put in a technical chart and saying, we're going to go here because of this and this indicator and that indicator. It's all nonsense. Okay? This is really simple. If someone starts bringing up indicators, you're on social media, you're watching a YouTube video that's explaining the technical reasons why you went up today, run away screaming. It's all macro. That's why we moved today. So when someone says, oh, it's because we're here on the chart and this and that. No, I'm a technical trader. I've been a technical trader for 20 years. I will always be a technical trader. This will tell me when. Understand the magnitude, meaning the velocity of today's move and the velocity of movement that's going to come later on this cycle. It's all going to be macro. The macro is going to affect the earnings of companies. Certain companies are going to benefit greatly from the macro play. It's all macro. So if someone tells you that this is a technical move, you're going to say, actually, it's because they bought bonds, yields dropped, the dollar was sold off, and that in turn drives equity higher. That's what you're going to say to them because now you know. You can't unhear it. Macro, fundamental, technical. Make sure you stay with it, learn it, live it, love it. Okay? Can't make it any clearer. You need to understand even a modicum of macroeconomics right now and how things are going. It's going to absolutely be a game changer. And the people that don't get this are going to wonder what happened and why they missed probably what's going to be an enormous run. Right? If you go back, let's do this for a second so that you get why I'm trying to be so vehement about this. If you go back, this is the S&P, and you go back to 95, and you go back right into here, this was the last rate hike by Greenspan. You had a new technology that was coming out. It's called the internets, right? I know it's not pronounced internets. I'm just trying to make everybody laugh. But see how we're here? New productivity tools coming out. I wonder if there's a new productivity tool coming out now. There is. It's called AI. So here's where you're at February. Okay. So now you have the last rate, and all you're going to see on social media and YouTube and all these places, they're going to say, well, when the hikes and the cuts start, it's time to get out of the market. Not if productivity is going to go through the roof. You actually want to be in the market if productivity is going to go through the roof. Okay, and just so you get this, AI is going to drive productivity. People might not like it. It's just the way that it is. Right in here was the first cut. While he's cutting, this is what the market did. Right? So you do not want to get out of the market when you have productivity picking up in a cycle. Okay, you do not want to get out of the market. Now, eventually, everything comes home to roost, and we're all aware of this because we all lived through the pandemic, and you're going to have a different turn, and the economy will turn. But this, coming into a productivity cycle, which is what we're coming into, AI is in the first and second inning. NVIDIA is already talking about chips out to 26. So you're really in the beginning of a productivity cycle with the last rate hike, and you're going to start cutting. And this is where the first cut happened, right in here. And you're going to have people tell you that you need to get out of the market. And if you listen to them, you're going to miss the single greatest move that the market ever had if you did that in the 90s. What is this move going to look like? It's anybody's guess what we deal with. But to think that you're supposed to get out now because they're going to cut rates is not, it's just not prudent. It's not where you want to be. And this is why I keep hammering home macro, so you at least understand what's going on. Now, could it get worse? Could I'm going to call him Greenspan, could Powell and Company actually be the worst Fed in history? The answer is yes. But could they have done so much damage to the economy because they just kept hiking and hiking and hiking, that we do come home to roost and we do have more problems than we even know that we have outstanding? The answer is yes, and we don't know the answer. But you know who's going to know further? The people that understand macroeconomics are going to be able to spot it faster. So you really want to study this stuff. That's my lesson for the day on the macro side. I really want to hammer that home, and I really want you guys to get that. You should be reading books on macroeconomics. I'll put a bunch of them together. It won't matter to me which ones you buy, but I would be paying very close attention to that. XBI, why did XBI lead today out of everything? Because all of a sudden, they're not worried about their funding as much. And so you're going to start seeing the XBI names because funding is going to be cheaper. Cheaper funding means that these companies can stay in business longer. They can stay in business longer. Then you're going to see them drive and go forward. I think that's a really important lesson because we really didn't see the huge drivers that you would expect today. You saw utilities. They rallied substantially. Some of these names look absolutely amazing. Southern Company is the one that I tend to buy. It's pretty much like one of the most conservative companies out there, pays a dividend. If you're ever looking for a defensive name, you never really have to worry about it. It does exceptionally well. But You had the miners of all stocks that are lifting today, which it looks exceptionally well. You have retail where people are saying, well, we don't have to worry about retail and the consumer anymore because rates are going to come down, so you're going to be able to afford houses. This gets really interesting because you should be towards the end of the cycle because of the rate hikes. But supply is so low, and if you start cutting again, you could spin the cycle up again. Now, the problem this time with doing it with like Toll Brothers and these names that are rocking, for me, the big problem is that I like buying them when they're at book value. They're not at book value anymore. So eventually this is going to be an absolute disaster as far as to the downside, but I don't know when that's even going to start being a disaster, candidly. You can see how they bounced all off that VWAP, and I wanted to get into that and show that. So these are things that we must pay attention to. Now let's get back and let's just focus on the most basic things for 1 second and just look at what happened with the 10-year. Just look at how the 10-year absolutely imploded today. Absolutely imploded. So now everything's getting cheaper. People are not buying puts to protect themselves anymore. The dollar is imploding. Okay. I'm going to say it one more time. This is a macro shift. You do not have a bar that looks remotely anything like this in all of 2023. Why? Because the rates are over. Okay, so that entire trade is going to unwind and equities are going to go higher. But you know that because you know when bond prices drop and the dollar drops, that equities go higher. What equities really benefit the most? Start looking at XLI and anything that we sell overseas. But really important to understand that you want to spend some time drilling into these sectors. Now, one lesson, you can see this hitting new highs. And I think this is absolutely fascinating that we're hitting all-time highs on the XLK. And you would think that would be the one that would move today. What's fascinating is earlier in the week, actually 2 weeks ago, I showed you how to use intraday or even on the week, how to sort the sectors really fast to find out where the money's going. And I want to show you this clip, 2 minutes, on how we did it today, and we're able to spot them.
They're just rotating sector and sector and sector. That's all they're doing. They're rotating. All they're doing is digesting this move. That's all they're doing. But they're rotating throughout the move. See how the SOX is like, here, let me show you what I mean by that. See how the SOX is doing this, and all the SOX has done is going higher and higher and higher. That's all you've done, right? Like this is setting up for a major move higher, right? That's all that's happening here, right? They're rotating through the sector. See how it's not NVIDIA that's leading? See how it's not AMD that's leading? Right? But look at the SOX. So what they're doing is they're rotating through the sector, right? The sector's not going to go up unless names in the sector are going to go up. So they're rotating through. So now what you're trying to do is you're trying to figure out what names they are because they're not the big guys. So you start looking, or is it the little guys that are doing it? Yep. It's the little guy, AEHR, those kinds of names. So these kinds of names are setting up to move. So that's something that we're going to start paying attention to. So they're rotating on us. I think I might have a SOX in here. If not, no, I don't. I have the equipment manufacturers. Let's sort them out. See what we get. Atom, 5%, 7%. So it's all the small guys that are keeping the SOX up. SIP, MKSI, AEHR, T. They're the ones that are breaking out. It's all the small guys. That makes sense, actually. Okay. All right. Hello. No. See the difference, right? But all up here. I bought Netflix. I think it might become a swing trade. I bought Netflix here. I'm just going to use a dollar stop on it for now. If it goes down $1, I'm just going to blow it out. All my stops are going to be super tight today, guys. Don't try and bottom fish right now, guys. You want to find out where's the money going? All right, so now we know where the money's going. SIP, all the money's moving. SIP, now we know where the money's going. XLC, all the money's going into XLC. It's Meta, it's Netflix. They're rotating the money. Where's Meta? They're rotating. I don't know if they're going to rotate sector, but they're definitely rotating stock. SIP, Meta here. I'll know 2 minutes, 4 minutes. Worst case scenario, I'm getting stopped out here. It's going to cost me $1.50. I want to use the Doji as the stop, but I can't wait because it's going to push. All the money's going into XLC. Jump with that out there. Focus on the XLC names. Focus on Meta, focus on Netflix, focus on Roku, focus on Google. I would stay Google, Meta, Netflix for entries there. You're up 50 cents on Netflix. If you're that concerned about it, move the stop to break even or sell some trim sell. Meta's already working. That's what they're doing. They're moving the money. They're rotating. Up $2 on Netflix. If you're concerned about it, pull something out. You can always just put the stop at break even. Up over $1 in Meta now. So you should pull something out if you're day trading. SOXL's rocking. See, XOXL is moving without, you're moving without, look at that. So I'm going to be able to go off this bar in 4 minutes and actually add to SOXL. I'm going to add to my trade right there. What's that forms? Hello, Meta. Who's a winner? We are. Boom. Who spotted rotation? We did. Killing it in this Meta now. Up $1.50 in it. SOXL, that's breaking out. See, I'd rather play this because I can't really buy those other names, like those little tiny names. I'm not going to be able to get in and out of them. The important thing is we used a tool. We spotted the rotation. And because we used that tool, We were able to get into Netflix. We were able to get into Meta. We were able to get into Google. When everyone else is being stagnant, they're all looking at NVIDIA. They're all looking at Tesla, right? Why aren't they moving? They're supposed to be moving with the stocks going higher. Instead of telling the market what it's supposed to be doing, we're looking at it and saying, why aren't you going higher, right? Very different mentality. So just make sure you're pulling stuff out on the way up. I just pulled out some of that Meta when it was up like $1.50. You have to stop on it. The rest of it's like break even. And I tend to do that on days like today because these kinds of days we can just grind higher. And I don't want to be in a position where I'm sitting here trying to get back in. So like NVIDIA is dropping, but SOXL is going up because it's rotation. Now they're just going into the small caps in the stock, which is why you're up 4% here in the day. This is going to have a 5% day. SOX is going higher, but look what's happening. Certain names are dropping. You're better off literally just going by the index. I mean, you literally are just by the darn index and sit back, get out of the way if you don't want to play the game. But spotting the rotation is the way to go. That's way easier.
Now, that helped us get into XLC very fast and told us exactly what was going on. And we were able to capitalize on that when everybody else was sitting there watching other names. We saw which way the money moved. We were able to sort super fast and then sort those names. We were also able to drill into a sector today where we drilled into the SOX and saw that it wasn't large cap that was moving, it was small cap. And then we were able to find the subsector that was moving in that and benefit from that. So comment on that below. Let me know if you find that helpful when you see these live trades. People really seem to enjoy those live trades and they find them very helpful. I will gladly continue to post that. I have no problem. Someone's helping me with it. But just comment on that and please share this video. You'd be surprised the comments I get from people that are sharing it, retweeting it, and talking about it, emails. It's crazy, and I really appreciate that. The YouTube algorithm, let's do this Microsoft trade and how we did this today. The algorithm picks up if I'm doing promotions for people or running ads in the middle of this. I don't want to show you a Cobra trading ad. I just want to teach. I just want to get this information out there so people can get more proficient. If you've been with me since we started this channel about 2 years ago, you know why I'm doing what I'm doing. So I do appreciate your support, and that makes up for you not being bored with me telling you how great some trading system is. So here we are, and here's the open on Microsoft. Really, where are you going to get your edge on this trade today? Where does the edge come in? And I'll walk you through the trade, but really for us, the edge in this trade came by understanding the pre-market data. Now, if you've been following me for some time, I'm big on pre-market data. And one of the things that was very clear today that all you had to do is mark that right there and mark all your names, any of your names. I'm going to just jump onto a tangent. Any of your names off that bar with an anchored VWAP. Okay? And your day was a lot easier. If you started seeing how you were breaking that down in the beginning of the day, you just stayed away. You didn't even have to worry about whether or not you were going to get hit or anything like that. It just made life super easy. And then you could see which names were respecting that, and that started presenting opportunity for you. Overlay that with the actual one, and life got super easy for you today on where you should get in. But what I want people to understand is how to utilize these bars, these 5-minute bars, 1-minute bars, whatever you want to do. In this case, what I'm going to show you is just off a 5-minute bar, but you can even see it off the 1. I think the 5's a little bit better when you're trading in the middle of the day, just because it makes it cleaner, and the low is going to be the low. It's not really going to change in the first 5 minutes. It rarely does. But if you come here right to that open, so this is the open of that bar when CPI hits. So you mark that off. All right. Now what this is going to do is you already know where your VWAP is. You don't want to do the VWAP trade, right? If you know you're down here and everybody's selling and everyone's going, oh, this is a lower low. There's a couple of things that you're going to learn here that are going to you should be aware of, but this is pretty glaring. So you have your pre-market right here. Draw this right here, and I would use these wicks right here. So let me just draw that perfectly so you can see where I'm going with this. And what I would do, I would draw these wicks and say, okay, here's my channel. I came down to my channel. So I have what I call and refer to as a kill zone, and that's right there. All right. So this is the kill zone. I'm not using anything else. I understand I'm below VWAP. I understand that people will say, don't ever buy below VWAP. Good luck with that. Don't ever buy below VWAP. I think if you're newer, don't buy below VWAP. If you're familiar with this, buy below VWAP. If you get good, if you get proficient. And the other thing you can always do, you want to see where you stand, clone these. See if they just fit somewhere. Sometimes they will, and sometimes they won't. But it never hurts to just kind of take a look and go, okay, well, there's kind of a channel there, but not really. But okay, So we looked and we're not really happy with anything that we would refer to as a channel. Maybe we come up here and see if it fits up there. No. Here, no. Okay, so we really don't have anything that we would refer to as a set channel, but you always want to look. So you have this downward trend line and you have this kill zone that's sitting right in here. Now, this level right here, when everybody's throwing it out, this is where you can look to enter a trade. Now, you have that on a 5. Now watch when you drop this into a 1. This is perfect. This is exactly what you want. So you drill into this, you know you're right here, right? Look how you've reversed right here. Look at the dragonfly pattern right here. I mean, this really should be, I should really do this in a book. But you see that little dragonfly right there? The dragonfly is when the bar closes and opens at the top and reverses. And we know that wicks are price rejection, so everything below it was rejected. You gap up in a chart. That's a candlestick pattern, actually. If you gap up like that, it's called a rising window. So you have this right here. You have this beautiful bar that's sticking right there. Look at where your risk is and look at where you're at. All right, so this is where you create edge. Edge is an advantage over everybody else. Hopefully you follow what I just did there. So I'm not looking at any moving averages. I'm not looking at volume. I am looking at this and seeing how price responds to a very specific place. In other words, are the people that were buying here at 8:30, are you going to support me or are you going to run away? Because if you run away, this can get like nasty. If you're going to support, then this is where I want to take a look. Now, for our purposes, you can see it right here, 212. You can see right where we entered, it's right there. And then when we're up, we're trimming. And then what I'm trying to do is teach everybody while we're trading positive slippage. The rest is break even, may hold overnight, right? You're trying to make decisions what you want to do, but at least you can see when the trade was executed. And it was executed right in here. Now, what's great about this is it gets you a real low entry risk price into the trade. And then this is where I'm just explaining the trade out. You can just see the level that we're talking about. I post the trade and what has me thinking about it. Try to do it quickly, especially if I'm trading. You see the timestamps when we're doing this. You need the pre-market data, major events. So when you have major events, you need to use the pre-market data and what happens at that particular time and use that bar. It does not mean that it works, but there will be levels that most people will miss. If there's a level that's missed, it gives you an edge. And these are other trades that we were doing or showing. And then I'm just explaining as it happens 45 minutes later, this is what edge looks like. That's what true edge looks like. No one's down here buying. No one's paying attention to this. This is what happened to the trade. You traded it like you want. And, I was talking about that at the time, but you get where I'm going with this. And this is where we're at. And then we get right to the open. At that point, I'm just like, we did exceptionally well with it. We literally caught the bottom of the trade because we knew where the edge was. And then we got to the open and we rejected, and that's where we got out of it. So a little rough in the way that I'm showing that. Hopefully you found that helpful. Please comment on this. I think it was a great way to kind of show what's going on out there. Now, what do we do about tomorrow? Well, we've had huge moves in Microsoft, Amazon, Netflix. These have all had absolutely huge moves. NVIDIA, you can just see how these things are all closing on dojis near the high. The question is, what do you do tomorrow with it? What I would do is see how we respond to the PPI and the CPI at 8:30. Do you get another bar like that? I would expect PPI to be in line the same way that CPI is. I would not expect to see a huge difference there between the two. That is the very first thing that I would do tomorrow. And I would sort and see how these stocks are acting at major resistance levels and go from there. The most important thing for you to watch tomorrow is continuation, not even on the indexes, because you're going to see it on the indexes. If you see the 10-year break below, and you can even watch it at 8:30 like we did today when we were pre-market live, public. If you don't watch the pre-market lives, they're always recorded and they're public and you can watch them. So here you are and you can see that level. Also, if you're on the wait list to get into the community, a letter will go out this week and then it's going to be closed for the rest of the year. So if you're on the wait list, take a look for it. The link for the wait list is in the description and I'll pin it later into comments as well. And then watch the dollar. If the dollar follows through tomorrow and the 10-year follows through tomorrow, you can continue to push. The larger issue for us is this, and I'm going to leave you with this noodle so you can wrap your head around it. These are Bollinger Bands. I use first, second, and third standard deviations. You are on the second standard deviation and you are pushing. They are getting wider. You have a macro event, so this can continue. But when you start pushing to the second and you start getting up to the third, you hit a point where there will be some kind of regression. So we have to be cognizant of that, and we're going to have to look for that tomorrow, even though it is very clear that this market wants to go higher. That's it.